All right, so good afternoon, everybody, and thank you for joining Wes today in another one of our fabulous webinars. Today, we are pleased to have Jenya Webster, Senior Accountant with Deloitte Private, joining us for our webinar. Jenya has over 20 years of experience in marketing, management, and accounting, including the public accounting and private business sector. She enjoys working with small businesses on finding the best practices in bookkeeping and accounting. So during this hour, Jenya will share some proven cash management strategies with us and some techniques to help you manage your cash flow. So thank you, Jenya, for joining us today. And you can begin whenever you're ready.
Everybody, thanks Josie for introduction, and thanks everybody for joining me today on this great sunny afternoon. And we're just going to enjoy going through the cash flow topic, a topic that I find is critical for any business owner, not just to think about, but actually to have a good understanding of what's required from you as the business owner, or maybe as an accountant or bookkeeper, in order to stay on top of this, basics in the business and make sure that you have enough cash and the company actually is operating efficiently. So today, our agenda items we will just briefly look at the main causes of cash problems. We also will look at the strategies how to keep cash flowing in the business. We will assess some cash flow management tips that you can actually use in your everyday life and activities. We will talk about how to develop a cash flow forecast. I believe because you're today here with me, you understand the importance of developing a cash flow forecast. So I'm not going to spend too much about it, but I do want to talk to you. How do we actually do that and find, easy steps in order to educate yourself, or maybe finding some few things that you have not been doing, and then you can take them as a takeout from today's hour and actually start looking into these topics in the future and develop your skills. At the end, we will look at the simple suggestions how to make your life a little bit easier when it comes down to cash flow forecast and budgeting. Today, we will use the chat box, but I would ask you, please put your questions as we go through the presentations. The only thing that I wanted to ask you, please wait till the very end, and then I will answer all your questions. But please feel free as we go through topics to just throw that question at me, and we will definitely look at them at the very end. So the slide that you see in front of you right now has two parts. On the left side, I put the questions that I always like to ask business owners, and on the right side, you actually see the main causes of cash problems for many businesses, and usually it's it's what we don't do that's causing us kind of not to succeed in some things. So literally, it's like your checklist. So when you look at the first point, it's planning, budgeting, and controls. So do you actually spend enough time on doing these activities? And how do you do that? Do you perform your bank reconciliations? Do you have your budgets ready? And what do you do with this budget, right? How well do you know your numbers? That's the question I like to ask owners. And sometimes business owners, they will say, well, accountants, they will compile some financial statements. I don't really know what they're about. But remember that accountants do this work for you, for the owners, because your business actually, like, we're counting your money. So you have not just the right to understand your financial statements, but you actually have a responsibility to know what's behind these numbers. When we look at the inventory number on the balance sheet, do you know what's actually this number is compiled out of? Do you know what's behind that number? And when you print an inventory report for yourself at maybe before or after the inventory count, does it actually give you and provide you useful information that you can use for your business and for your management decisions? So as you see, planning, budgeting, and controls, inventory management, accounts receivables, accounts payable management, these are all the main key components that could help you with managing your cash flow and budget, essentially. And the very last point is management culture. What I mean by saying management culture is basically the owner of the company, and especially in a small business, you're like a projector. Imagine you're watching a movie. So you're that projector that projects the picture on the screen. So it essentially becomes your values, your expectations from the business, the procedures, the rules, they're all coming from that projector to the big screen that people who work for your company or customers or suppliers that you're dealing with, they're actually able to see. So when you have these rules for yourself and you have a discipline, then it's easier for everybody else to see that and understand that and actually follow these rules. So it's very important to remember that it is essentially up to the business owner to set those kind of criterias where your business want to be. So set it at the high level. You might not be able to know at this moment what exactly that means, but like I always say, aim high and try to be there, okay? So let's move now to the actual strategies. So we basically want to look at what does it mean managing your accounts receivable. Well, let's talk. So today, when we look at your bank statement, you have deposits, you have expenses. So accounts receivable represent usually what comes into your bank account, so your deposits, your sales. We are not able to talk today about how to grow your sales. We're not talking about that topic. But what we want to do is how do you actually make it efficient for your company when it comes down to collection of accounts receivables. So let's look into this in a little bit more details. And once again, keep in mind, businesses are different. Some businesses operate on a basically point of sale system where you collect your payment immediately. But as you grow, or depending on the industry you're in, your accounts receivable process could be very complicated. You might have a dedicated person doing just AR basically job. So when we look at the process of what actually happens on the accounting and on the cash flow side, from the moment you deliver your services or you sold the product, then you need to generate an invoice, and then the very next step would be collection of payment. So the main rule is collecting accounts receivable as soon as possible should be just a regular practice for any business. And what that means, it's not just you, the owner, or an accountant should just know that, okay, this is what I want to do. It should be kind of a message all across the board. It should be implied that this is what we want. We want to make sure that we do everything possible on sales side, on administration side, to collect the payment on time. The sooner the cash gets into your bank account, the better it is for the business. So how do we do that? Look into the internal processes that you have currently running in your business to ensure that it takes the minimum amount of time from the moment you deliver the product or you made a sale to the process of invoicing your customer. So basically, try to do invoicing as quickly as possible. And, as simple as it sounds, but very often, especially if we're talking about business with some administration people, a bookkeeper, and a little bit more than just 2 or 3 people, you could find the delays, and they're not really reasonable delays. It's just because nobody really looks into that. So your expectation is either to yourself or to people who work for you is to make sure that this process is minimized and you get the invoice out of the door as soon as possible. Now, if your customers pay upon receipt of an invoice, and you basically invoice your customer and you receive payment later, make sure that invoice prepared actually have proper terms printed on it, and if the total customer balance doesn't exceed of what their approved credit balance is. And what it is basically when you open an account for your customers, you want to assess the credit ability of this customer. You want to know, okay, this is going to be the limit. But remember, somebody who is issuing the invoice has to actually approve that that's okay for this amount to be provided to a customer on account. Once again, we're looking into certain procedures that you want to put in place for office staff to use. And I recommend that these procedures could be reviewed annually or maybe more frequently if your business grows and goes through stages or your staff is growing. So definitely keep an eye on that. Still staying on the accounts receivable management topic, when I said try to get your invoice as soon as possible out of the door, but please check it. Once again, it does happen very often, too often, when the wrong invoiced amount goes out of the door, gets to your customer, and first of all, it creates unnecessary time lost, it delays your payment. Second, it creates your customer not being happy with it, and especially if you undercharge your customer. That's a real unpleasant situation when you have to get back and say, sorry, we made a mistake. So have, once again, some procedures, somebody checking it, and make sure that it doesn't happen. And I guess the good practice will be just see how often it happens. And if you see that there is an issue with invoicing process in your company, have a look at that and tweak to the point that it's actually eliminated to minimum. Good practice is to review your accounts receivable listing every week and definitely follow up with customers who are getting overdue, let's say, whatever terms you have for your own business. It could be over 30 days or maybe not long paid accounts. So following up with your customers promptly usually helps to collect the payments, or it helps to identify the problem. And it goes back to this point that I mentioned when you have some customers that you allow to pay later. So maybe there's some problem with this particular customer, and you might want to delay delivering some of the services or products to them until the payments are done. So have a look at your accounts receivable weekly and have a chat with your bookkeeper, or maybe you have accounts receivable person, or if it's yourself, definitely follow up on the late accounts. As a suggestion, look into option of quick pay discounts for your customers if it's applicable to your industry. It's just one of the options that you have to keep in mind that it is possible, and if that will make your life easier, if it's still economically viable for you, then use it and offer it to your customers. The next point is about credit card payments that made by customers. Me being an accountant, I really don't like that item because to me it's just like an extra tax on small businesses that just takes away, out of gross sales, and I really don't like that item. However, I do understand that depending on the industry, you might be forced to use credit cards. In the situation when you have, let's say, industrial clients, or you have bigger companies who work with you, I don't suggest to promote using credit card payments because, again, it might save you 2 to 4% of this credit card charges. So try to suggest set up direct deposits, online payments when possible. Usually companies, especially bigger clients, they are moving towards that. It's easy, money is in your bank account immediately, and you don't have to pay this credit card. So look at the similar businesses in your industry, check it out. I always give an example to business owners. When you go to buy a car, they don't allow you to put the entire car on the credit card payment. So then why should you be doing, allowing that $20,000 bill to be paid by credit card? Perform your due diligence when setting up credit limits for customers. You don't just want to try, I encourage people to trust each other, absolutely. But the real life shows that there are different people around, and there will be people who would want to take advantage of your business. Protect yourself. How do you do that? Use the credit application form for your customers if you're going in that direction, and don't just collect information, but do a credit check. Contact the banks, check for their history, contact their references, and use your judgment to what credit limit you want to set it up for particular customers. And definitely stay in tune with the business community. If you hear something not favorable, definitely have a look at what you have going on, how much business you have going on with this particular customer, and tune it accordingly. So don't just make it as a once in 3 year activity. Always stay in tune with what's going on in the lives of your customers, because it might affect your business as well. The next point was about accounts payable management. So we talked about accounts receivable. It's money that comes into your bank. Accounts payable is when you pay your bills. It's anything that comes out of your bank account. And when it comes down to accounts payables, usually I say the very good practice is to have purchase order system in place. Purchase orders is basically a log of all orders that company or placed on behalf of the company by dedicated people. It could be a purchaser if it's a bigger company. It could be just your staff. But basically what it does, it registers the fact that this particular item was ordered by this person on that date in this quantity. You fix the price. So you document what order was placed with your supplier. Now, what happens when you actually receive? Why is it important to have that log? Because sometimes, just like we make mistakes on issuing wrong invoices, the same thing happens to your business. Sometimes your shipment could be shipped wrong. So if you don't really have that system in place, how much actually you wanted to order and what was the actual order, then how are you gonna know if this is the correct shipment or not? So purchase order is a good record that you put against the invoice and against the packing slip that just basically verifies. And trust me, there are lots of mistakes going on in this field that could be eliminated if this process was in place. That also helps to eliminate double paying invoices, because in my practice, I've seen cases when the same materials delivered to the company were invoiced twice. And it's just a normal human error. So when you have a packing slip, you have a purchase order, and you have an invoice, you're already not going to pay it twice, because your system is tracking all the processes and putting them together. Watch what's going on through your company credit card purchases, especially if you have multiple users for company credit cards. I know you might think, well, it's the bookkeeper's job or my accountant's job to know what's going on there. Their job is to record what's going on. your job to actually be aware, or as the owner, and I'm mostly appealing right now to the business owners. So your job is to know what's actually going on, unless you're the only one who's using the credit card. That's okay. Checking vendor statements and verify balances that are actually listed on the vendor, on your supplier statements. This is a very good practice. I had a situation when company was receiving supplier statements monthly, and they were going straight to the recycling bin. So my question was, why nobody is looking into those? Well, the answer was, well, I don't really know what to do with them. Okay, let's look at this vendor monthly statement. What is it actually telling you? It's telling you all the invoices that your vendor issued to your company to be paid. So it's a great statement to actually verify against invoices that were recorded in your system. Did you actually receive all the invoices? Sometimes invoices get lost. Sometimes somehow it didn't make it through the system. Maybe they're just sitting on somebody's desk if they're still being delivered by mail. And once again, I remind you here that purchase order and receiving process is a very good way to control these mistakes. When you look at the vendor statement, monthly statement, and you see something with a minus in front of it, usually it tells you you either had a refund or you have a credit sitting on the account. And again, it's my experience from working in small business is that very often these balances get overlooked just because it's not obvious, it's not a credit sitting on your desk. And what I found that sometimes it's just a matter of inquiring about this credit amount. And if, let's say, you don't deal with this supplier anymore, you're not planning to buy anything, but you do have a credit, just ask them to return this item, and they will return the balance owing to your company. It's a real life story for me when, again, in the business, I see about 9 different credit amounts. I inquired about them, and people said, oh, we don't even know. They've been there for years. So it took us about an hour to contact the suppliers, and we collected the money back. Nobody is going to hold on to that, but it's about basically you collecting your own money that are being owed to your company. So do it. Keeping good relationship with your suppliers is a very, very important practice for you as the owner, because what it does, you're basically building your own credit rating with them. And when the times happen when you're actually experiencing some cash problems, or maybe you're getting too busy and your volumes of purchases are growing and you just don't have enough cash, this is your chance to actually go back to your reliable suppliers and talk to them and explain. And very often they will go and they will help you. They will extend the payment terms. So it's a very good and very important to keep this good business working relationship with your suppliers. Keep that in mind. Inventory management, huge topic. Could be many, many webinars done on that topic, and I will be very, very briefly. I mostly could only put some points for you to think about, to basically start you thinking about that. If you do have inventory, you know that you need to pay attention to inventory levels. Inventory is a huge item on the balance sheet for many, many companies. And I'll always try to teach people, remember, this is the cash. And they say, well, no, it's not. Yes, it is. The cash was paid for this, and cash should be received for this item. So the certain procedures need to be put in place for inventory control. It is important that nobody takes advantage of your business just because the poor inventory procedures are in place, and you don't want it to work out, you don't want it to be unreconciled. It's very, very important for you as the owner to know that your inventory levels are appropriate, and that it's actually the turnaround is exactly the way you want it to be. How you do that, it really depends on the industry. It really depends on how much time you spend into that. But to be honest, it's about discipline. So it's easy not to think about it. At the same time, it's not that difficult to make yourself once a month to dedicate a few hours, look at your inventory report, see what's going on, maybe to have a chat with your accountant or go and see maybe you need to do some little cycle count. One of the advice from me as an accountant will be usually business owners, I find they're so excited about keeping the business rolling, and they get excited about sales and opportunities. And a good sale was offered to you by your supplier. You get it all in, your warehouse is stocked, and then you find that you can't really move it. So always think from your own perspective. Do you really need it? I know it's great to have a good relationship with the supplier. It's a great deal. But if it's going to sit in your warehouse for 3 years, not a good thing. So develop procedures for handling inventory, and not just develop them, but actually live them, follow them. Teach your people how to handle inventory. Organize sales for slow-moving stock. Sometimes we had a practice when it was just worth, donating all inventory, because when you have few years of old stuff sitting around without moving, it just creates a mess. It creates messy records, and if you know you're not going to get any money soon, then just clean it up, donate it if you can. Inventory software system. This is a great topic. Almost every software these days comes with inventory module. And how do you know it's actually doing a good job? Do you know that when you look, is your inventory, let's say, levels, are they live? If I click in your system today, would it show me that this is actually what you have on hand, and this is a proper name of the item that is showing on the screen? Any good system might deliver poor reports if users are not fully trained and nobody really overlooks and checks the inventory management records. My advice will be, have a dedicated person who actually has understanding how your inventory module works, and try not to have too many users who have access to override or put some information into the inventory module. So basically, try to keep it as consistent as you can, and once again, make inquiries at least monthly. Look at your inventory report, look at the names of the products. Do they make sense? Are they being duplicated? So the sooner you identify the issue, the easier it is to correct it in the future. And then all it comes down to a better inventory count. And why do we need to do inventory count once a year at least? Is because how do we know that this X number of dollars that is getting put on your balance sheet, that it's actually what the actual value of your inventory in the warehouse or in your store? So inventory count, basically what it does, you do the physical count, you reconcile it against accounting reports, and this is the time for you to have a look. Is it moving? Do you have some items that really should not be there? Are the records in a good shape? Who is doing that? So it gives you lots of food for thoughts, and just use this information. Be curious. I always encourage business owners. Know your numbers. Don't just have some idea, but actually put your nose down once in a while and get very intimate with the inventory reports. It is very, very important for you. Remember, it is your cash. The next slide, we're going to talk just about cash flow management tips that you can apply to your business. Essentially, it's a summary of the things that we already talked about, but I also try to find what else can we, apply on a every day or monthly basis to make it easier for business to be proactive with cash flow. So definitely manage your accounts receivables, manage your accounts payables. Do a yearly review of terms and volumes of sales. Evaluate collection history for your customers. Maybe it's time for you to review some credit terms for some of them. Maybe it's time for them to be decreased or increased. Just do these activities once in a while. Build relationship with suppliers, like we talked about. Ask your suppliers about volume discounts. Remember we talked about quick pay discounts when you're actually selling your goods and products? So try to get the same things from your suppliers. I had a real life story once again. I don't just create this storybook for you guys, but it's all real practices. When you pay invoices, and then I thought, well, how come everybody else is giving us quick pay discounts or rebates, and we don't get anything from this particular one, and we're having pretty good volumes with them. So it was just a matter of calling them, and they said, well, but you never asked. So I said, okay, great. So now we asked, and we got a good quick pay discount. What it does, it allows you to save extra 2 to 5% sometimes if you have ability to pay these bills on time. So use online banking to make sure you don't miss the due dates. Due dates, especially when you have quick pay discounts, could be 10 days. And definitely you want to make sure that the payments are done on time. Sign up for the receiving suppliers invoices via email and not regular mail, and that you can check for the due dates ahead of time and plan for it. Surprisingly, we still have businesses who use lots of mail, and I definitely encourage you to use as much as possible emails and online banking, direct deposits. It definitely saves time for everybody. We mentioned emailing invoices to your customers instead of using regular mail or hand delivered. It still happens, but if you can, use emails. Keep insurance and workers' compensation board statements up to date for those customers, for those of you guys who require proof of insurance for payments. And just have the certificates handy that if your customer accounting department is requesting it, so you can quickly provide it on demand. Review monthly bank reconciliations. This is one of the control procedures that is important to be in place for small business. And if you don't do the bank reconciliation by yourself or somebody else is doing it for you, then just inquire once in a while, how is it being done? Review one of those reports. And when I talk about ensuring deposits processing and bank reconciliation separation of duties, we're talking about, once again, control processes in place. And what that means is that I don't want to say watch for people stealing from you. No, that's not the message, but it is keeping controls in place. You don't want people who take cash to the bank or take your checks to the bank and making deposit records to actually do bank reconciliation. If you have ability, try to separate these duties. It's one of the basics in cash control in your company. The other point is about managing and negotiating your loan payments, or if you have lease payments, it's the same idea. So when you look at your cash flow date by date, maybe you can use the loan dates as as a tool to negotiate when it's actually more favorable for your business. So instead of the beginning of the month, you know that your best cash position is in the middle of the month. So go to the bank and talk about that. Pay credit cards on time and in full balance, avoiding interest. That's always good practice. And review your inventory reports monthly and perform annually inventory count. All right. If you want to learn about importance of developing a cash flow forecast, I suggest you Google it, and you will find lots of articles about it. What I want today to talk about is how do I actually do that? And even though it might seem, well, it's the same idea as you would do your personal, finance planning or personal banking, but let's look at that step by step. And my goal today is for each of you to at least, pick 2 or 3 things that you can actually implement in your everyday life and for your business, and hopefully you can develop it further. So step 1 in cash flow forecast developing would be creating your fixed monthly expenses schedule based on payment dates. Where do you find this? You look at your bank statement or your credit card statements, maybe even income statement, and look for the expenses that comes out of your bank account, of your accounts, every month with the same preset amount. So this would be, we would call them fixed dollar amount, your regular monthly expenses. And these are the examples: rent, utilities, property taxes, salaries probably usually is the same amount, loan payments, maybe some telephone, website maintenance fees. So these are the fixed amounts that are coming out of your account every month. So you want to put them date by date so that you kind of could summarize them later on for each week. And the next step will be to look at your expenses, which I call variable monthly expenses. This could come still on on particular dates, but the amount of these payments varies from month to month. And usually they're tied to the sales volume, maybe the sales for the previous month is, we're talking about things like GST or PST. It could be your accounts payable, which could be your future sales if your kind of process is longer than just a few days. So you look at those points: credit card payments, accounts payables, commissions. If you pay commissions, commissions usually on delivered sales and also depends on the sales volume. Government remittances. I put WCB here because for some companies, it's the item that usually gets kind of overlooked. Life goes good, we kind of know what's going on every month, and then August comes, oh yeah, we forgot we have to pay WCB, or by April 10th, I believe it's twice a year, that's when we pay WCB. And for some companies, it's a pretty big expense. So just have it kind of somewhere on your schedule that you do pay this, and it could be a large amount depending on what type of business you do. So we talked that almost all these items in this category depend on sales volumes, and your goal is to prepare your best estimate for these expenses. And accounts payable would be your one category that you can use with the most flexibility in terms of payment dates. This is the category that you can shift. Okay, I cannot pay today and meet the quick pay discount, fine, but I could pay it in the next 20 days or so. So depending on your cash inflows and outflows. Step 3 will be, you will look at your revenue projections. Everybody is different, every business is different, so look at your historical volumes, look at your existing contracts, look if you have some seasonal changes in demand specific to your industry, and then assess timing for receiving your payments. Do you have regular cash coming to your bank account, or do you have certain dates, maybe twice a month you get particular payments from particular contracts when you collect most of your monthly revenue? So make that kind of schedule. We're talking about estimate, but do your best in trying to make it as realistic as you can. And your month-to-month could differ depending on the seasonal changes, if that's what it is for your business. And the last step will be you want to combine your fixed expenses, your variable expenses, and your revenue projections. And you want to combine them together kind of date by date. So you actually want to see, if I separate it by week, what do I have in week 1 of the month? What's my revenue projection? What my expenses? What are my variable expenses that I could maybe have some room to move, maybe the dates or maybe the amounts to be paid. So what that does, it basically shows you the picture of possible scenario, what it could be like. And once you completed monthly forecast, like I said, you separate it by a week, and you will see which week of the month will have the different, will have the most cash demand. Maybe you will have to find a solution to cover this somehow, but it will give you the projection that what you need to know in order to survive the month and move on to the next one. You can use it, you can use software where you can easily change maybe sales projections or maybe some expenses. And using software usually allows you to run few scenarios, or you can do it just by hand. It doesn't matter how you do that. It matters if you actually do it and, trying to think ahead about your business. So remember to review your cash flow budget against actual bank statements, because you will see the variances, actual versus budget, and you will learn better how to plan, and you just basically become more accurate and you become more educated about your own business. Let's try to fly through the next, I have, I guess, couple of slides, and then hopefully we'll have time to answer questions. Simple suggestions how to make your life easier and improve your daily cash flow in terms of life easier in terms of cash crunches. I mean, cash flow forecasting or budgeting, it's like exercising for people. If you don't do it, you are not in such good shape. If you do it, you will actually be better and better and better. Is it easy to do at the beginning? No. You might have some difficulties. Is it going to be better in a month? Yes, if you keep doing it. So that's how I look at that. It doesn't have to be extremely difficult, but you do have to have a plan, and you do have to have a desire to follow that plan and some particular activities that actually will lead to some particular result for your business. So the best practices will be have a plan, sales projections by month, for a year, and track them against actual. Set up the budget for your expenses. We talked about that. And track them and see where actually you need some help, or where you actually may be doing very good. And I bet you will find some areas that you can really improve on. Some businesses spend time on creating the budget but never use it. Why? Well, there could be millions of reasons and not to follow the budget, but I encourage you to use it. Budget could be used as a business management tool. It should provide insight into the health of your business and help you to identify areas for improvement. So don't come out of this today and say, oh, it's so boring, AR, AP, inventory, controls, bank reconciliations, too much. It doesn't have to be that way. First of all, you probably have people who are helping you with running your books or helping you with running your business. So take it step by step if you have to start from the basic kind of grounds, and set up achievable goals, just like with exercises program. Week 1, okay, I'm going to look at my bank statements, and I'm going to look what kind of expenses I have, and can I actually put them into different categories, fixed versus variable. On second week, you will look into your monthly and yearly sales projections. Week 3, your goal will be get your projections for expenses for the next month and year. And then by the end of the month, you're just an expert in preparing cash flow forecast. So I don't want you to be intimidated by accounting terms or by the amount of procedures. All I wanted you today is to get actually encouraged that it's all achievable, it's all about discipline, and it's all doable. I want you to take time each Friday to actually think about what's going to happen with my cash next week. Because if you do that, you come to work on Monday and hopefully you're not going to have bad surprises that week. And that should make your life better and should make your business healthier. As a summary, I put my very first slide. Basically, once you know the main causes of cash problems, you can start working on these areas, and you just make yourself an expert in this field of cash flow forecasting and budgeting. It will be the same principles, same rules. It's just a matter of how far you want to go. It really depends on your business, but it does require your initiative and the culture. Remember, you're the projector of that movie that you're going to see in your business and everybody sees. So be a good, clear projector. So I wish you luck with the forecasting, and let's now look at the questions. Okay, I'm just going to go to the very top. We still have about 11 minutes or so. All right. Could you speak more about having WCB and insurance payments up to date for customers requiring proof of insurance? As in, are e-certificates suitable? Does WCB send monthly updates? How current will insurance documents suffice? Okay, this is very simple. Usually, every business, and I worked in the business connected with construction, and I worked in trucking businesses. So both businesses required insurance certificate for your general commercial liability. And there were many commercial customers who will not issue the payment until they have this certificate current on file for you as a customer. So what you want to do, as soon as, if you in that kind of industry that requires for your customers to issue payment to you based on your insurability, make sure that when you renew your insurance, that you provide your customers with this renewed certificate. Usually it's a yearly term, but circumstances could be different. Workers' compensation, it's very common, like it's everywhere in the construction industry, services industry. Your account has to be in good standing with workers' compensation, and they issue you a clearance letter. You could either be, sometimes your customers could inquire about your WCB clearance for your business, and they could get response directly to them. Or you can have some, I believe there's a generic letter that just kind of yearly clearance that your account is in good standing, and that's all that is basically sufficient for you to receive the payment, if that's one of the conditions. I hope I answered the question, but I will move to the next one. How do you set up customers for direct deposit or automated monthly online payments? Is there a low-cost service provider that you would recommend? The way I look at that question is you're probably using online banking. So you have to go to your bank and you have to ask them that question. Depending on the platform that you're using for your online banking, you will be able to have different tools how to set up automated monthly online payments. Now, usually it's not a big deal if it's actually providing information to your customers. You just have to give them your bank account, branch number, and all your essential bank information for them to actually send direct deposit directly to you. So it's just a matter of talking to your customer what kind of information they require for their banking to send you a payment. Or, however, if it's a very small business, I believe you could probably even use this, what are these emails these days? You can send a payment via email. So look into that. It really depends on the bank that you're using. Okay? Third question, is there a rule of thumb regarding contingency funds dealing with a business break-in to deal with operating costs in advance of needing to deal with a possible insurance claim? It is industry specific, that's correct. I'm trying to think. So if I understand this question correct, is it about some contingency fund that we want to create? So I'm not ready to answer your question, Kathy, because I kind of need to understand the specifics of where you're operating in, and I think it would be geared towards what you're actually asking. Because it really, are we talking about $10,000 insurance claim? Again, it really depends. But remember, you also should be insured yourself as a business for any possible claim. So it really depending on the nature of question, Kathy. If you want, we can take that offline later and maybe chat about it. Okay, and I think these are all the questions so far that I see. So I just want to confirm that I answered all the questions. I believe so. Thank you very much. Thank you very much for joining me today. This is my email. If you have any questions, if you would like to get this presentation in PDF, feel free to email me and I will be happy to send it to you. I will be excited to know if somebody actually could implement some things from this material, and I really wish you the best. And thank you very much for joining. Have a nice day. Thanks, Josie.
All right, so I'd like to give a huge thank you to Jenya for taking the time out of her probably really busy day to share some insights with us and for teaching us some awesome tips on cash flow management for our small businesses. Like I said earlier, you will be able to watch this webinar on our website probably within the week, so you can always tune into our website and check back for some awesome details. I also want to say thank you to all of you guys who tuned in today. And our next upcoming webinar is entitled GST 101, and that's presented by Cassandra Whitelaw. So check your WESC emails, or you can always visit our website to register for these webinars. Thanks, everybody, and have a great day.